What's up, everybody? In today's lecture, we will be discussing the most profitable binary options trading strategy. If you are new to binary options trading, it's kind of different trading where you bet on the price, whether it will go up within a certain time or will it go down within a certain time. It might be 5 minutes, or you can take 1 hour time frame, or daily, or even a week or month. Like, you can bet on the price, it will go up within a month to a certain point. So I hope you would already know the basics, and we will come to our strategy now. And the strategy we will be using is SMT divergences. Okay, you can use it on anything like Forex or Bitcoin, or you can use it on indices. Okay, but Binance also has that binary options trading. So I will be discussing here Bitcoin, and I will be comparing it to Ethereum chart. Okay, if you are using Nifty, you can compare it to Bank Nifty, or if you are using ESU, you can compare it with Nasdaq. So that's how the SMT divergences work, and you can trade on different time frames using SMT divergences. You can trade on daily time frame, or 4 hour, or hourly, or 5 minutes. And here I will give you the example of 5 minutes SMT divergences and how can you predict the price, that the price will go up within the next 5 or 10 or 15 minutes. Okay, so here you can see Bitcoin made a low, okay, and then it pumped. So we will discuss how it pumped from here. Okay, so you can see this was the low made by Bitcoin. Okay, and here you can see Ethereum also made a low and then it pumped. So we draw a line here. Let me 1x. Okay, so here you can see Bitcoin made this low, but here it didn't sweep this previous low and pumped. Okay, and here you can see Ethereum swept this low. So once you get a sweep of the low on Ethereum and you saw no sweep on the Bitcoin, then you can long. That's your confirmation for your longs. Okay, Ethereum just went down to took the liquidity. Okay, that's the reason Ethereum went down. So Ethereum took the liquidity, okay, and then it moved up. I will show you some more examples. Okay, let me show you some more examples. So here you can see Bitcoin made a low, okay, and at the same time Ethereum made a low. So you can see Ethereum made this low. So again Ethereum took this low, took the liquidity, and Bitcoin didn't. Okay, so Ethereum started pumping from here and Bitcoin too. So you can bet on the price that in the next 5 minutes the price will go up. Okay, I will show you some more examples. Okay, this one here, you can see Bitcoin made this low and then equal low. Okay, Bitcoin made this equal low, and here you can see Ethereum made this low and then it took the liquidity. So again the price went up. So at this point you can bet on the price that it will be going up. Okay, Ethereum took the liquidity, Bitcoin didn't. Okay, and same is the case for shorting. You can see Bitcoin took the liquidity, it went up. Okay, and once Ethereum makes equal lows, equal highs, you can see it made equal highs here. So that's your confirmation for your shorts. Bitcoin took the liquidity and Ethereum hasn't, so the price goes down. So that's the reason where you can short and bet on the price that it will go down for the next 5, 10 or 15 minutes. So this was all about SMT divergences or 5 minutes. If you have any questions, you can ask me in the comments. Thank you.